Hello everyone, welcome back to Daily Wall Street. Today is Monday, March 17th, 2025. Let's dive right into today's top stories and market updates. Last week, after a sharp sell-off, US markets staged a powerful rebound on Friday. The Dow Jones rose 1.7%, the S&P 500 gained 2.1%, and the Nasdaq climbed 2.6%. Semiconductors led the charge, with the Philadelphia Semiconductor Index jumping 3.3%. Small-cap stocks also joined the rally. The Russell 2000 was up 2.5%. But despite Friday's bounce, all major indexes posted weekly losses. The Dow dropped 3% for the week. The S&P 500 fell 2.3%. The Nasdaq was down 2.4%. And here's why this matters. The S&P 500 officially entered a correction zone last week, falling over 10% from recent highs. The reason? Massive quantitative fund sell-offs, Trump's new tariff policies sparking inflation fears, and disappointing inflation data, even though CPI and PPI came in below expectations. Adding to market worries, consumer sentiment continues to drop. The Michigan Consumer Sentiment Index fell to 57.9 in March, down from 64.7 in February. Short-term inflation expectations surged to 4.9%, the highest since November 2022. Long-term inflation expectations also climbed to 3.9%, the largest monthly jump since 1993. Clearly, inflation remains a major concern. Meanwhile, small business optimism is fading. The NFIB Small Business Optimism Index dropped to 100, signaling rising pessimism about the economy. So what's next for the market? Two major events this week will shape the direction. First, the Federal Reserve meeting on March 20th. Second, Nvidia's GTC AI conference. Let's start with the Fed. Markets expect no rate change in March, but all eyes are on the Fed's economic outlook and future rate path. Three possible scenarios. 1. The Fed stays neutral, repeats existing guidance. This could stabilize markets in the short term. 2. The Fed turns hawkish. Warns about tariffs pushing inflation higher. That would be a negative shock to stocks and bonds. 3. The Fed turns dovish, signals faster rate cuts due to growth concerns. But that may spook markets, fearing a deeper recession. Now, turning to Nvidia's GTC event. Investors are hoping for a fresh AI catalyst. Markets want updates on new chips like the GB300 and AI hardware innovations, but there's risk of disappointment if expectations are too high. Last week, Nvidia stock bounced 8% but is still down nearly 30% from February highs. Other AI-related stocks, like Micron and Broadcom, also saw gains. And let's not forget, quantum computing stocks exploded higher on Friday. The quantum computing ETF rose 4%, and D-Wave, ticker QBTS, surged 47% after releasing stronger than expected revenue. This shows that speculative trades are returning, signaling a potential short-term rally. But the question remains, can this rally last?
Looking deeper into tech stocks. The Magnificent Seven tech giants, Apple, Microsoft, Amazon, Google, Meta, Tesla, and Nvidia, now trade at an average PE of 26, down from 33 at the peak, but still above 2018 to 2022 lows around
19. Growth expectations for 2025 are also being cut, from 24% down to 22%. Apple, for example, saw an 11% drop last week, its worst week in over 2 years. Tesla trades at nearly 90 times earnings. Meanwhile, Google is the cheapest, at 18 times, but still expensive historically. So, tech stocks are vulnerable if growth slows or if rates stay high. Meanwhile, AI server suppliers like Foxconn and Quanta are positioning for growth. Foxconn expects AI server revenue to double this year and surpass 1 trillion Taiwan dollars in 2025. They aim for over 40% global market share in AI servers. So AI demand is strong, but can it offset broader market risks? Now let's talk bonds. US Treasury yields have pulled back sharply. The 2-year and 10-year yields are both down as investors seek safety. But credit spreads remain stable. No major panic in credit markets yet. Which means while stocks are shaky, bonds are signaling a more controlled risk environment. Finally, what should investors do? If you're a short-term trader, be cautious about chasing the rebound. If you're a long-term investor, think about gradual buying, focusing on quality companies with solid balance sheets. Keep cash on hand for flexibility. Watch for the Fed's decision on March 20th and see if Nvidia's GTC event delivers new growth narratives. That's it for today's Daily Wall Street. If you enjoyed this update, please like, subscribe, and turn on the notification bell. We'll see you tomorrow with more insights and updates. Thanks for watching and happy trading.